Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 24th, 2025, and we're diving into ONEOK's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, ONEOK has just released their fourth quarter and full year 2024 earnings. Can you give us a brief overview of the company and the highlights from this report?
Thank you for having me. ONEOK is a leading midstream service provider in the U.S., focusing on natural gas and natural gas liquids. The company has reported higher earnings for both the fourth quarter and full year 2024, driven by strategic acquisitions and increased volumes in key regions. Their adjusted earnings per share for the quarter came in at $1.57, surpassing the forecasted $1.45.
Revenue and profitability overview. Let's start with the top line. ONEOK reported a total revenue of $7 billion for the fourth quarter. John, how does this compare to their profitability metrics?
ONEOK's net income for the quarter was $1 billion, with an adjusted EBITDA of $2.17 billion. The adjusted earnings per share of $1.57 not only exceeded the forecast of $1.45, but also reflects the company's strong operational performance and strategic growth initiatives.
What factors contributed to this impressive performance?
The increase in revenue and profitability was largely driven by higher volumes in the Rocky Mountain region and contributions from recent acquisitions, such as EnLink and Medallion. Additionally, the company benefited from a 4% increase in crude oil volume shipped and an 11% increase in total wells connected.
Strategic initiatives and acquisitions. ONEOK has been quite active on the strategic front. Can you elaborate on their recent acquisitions and strategic initiatives?
Absolutely. ONEOK completed the acquisition of EnLink in January 2025 and Medallion in October 2024. These acquisitions have significantly expanded their asset base and geographic reach. Additionally, they announced a joint venture to construct a 400,000 barrel per day LPG export terminal in Texas, which aligns with their growth strategy.
How is ONEOK returning value to its shareholders?
ONEOK increased its quarterly dividend by 4% to $1.03 per share and has repurchased 1.675 million shares for $171.7 million under its $2 billion share repurchase program. These actions demonstrate their commitment to delivering value to shareholders.
Operational efficiencies and future outlook. ONEOK has shown operational efficiencies in their latest report. Can you discuss the key operational metrics and their future outlook?
ONEOK reported a 3% increase in NGL raw feed throughput volumes and a 4% increase in crude oil volume shipped. They also connected 11% more wells compared to the previous year. Looking ahead, their strategic investments, including the LPG export terminal, position them well for long-term growth.
What about their ESG initiatives?
ONEOK received an MSCI ESG rating of AAA and achieved significant emissions reductions, reaching 77% of their 2030 target. This highlights their commitment to sustainable practices and positions them favorably in the industry.
Key takeaways. In summary, ONEOK has delivered a strong performance in the fourth quarter and full year 2024, with impressive revenue growth and profitability. Their strategic acquisitions and operational efficiencies have set a solid foundation for future growth. John, any final thoughts on ONEOK's investment prospects?
ONEOK's strategic initiatives and strong financial performance make it an attractive investment. Their focus on growth and shareholder returns, coupled with a robust asset base, positions them well for the future.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ONEOK's performance in the comments below.